guys, it's Femi here, and in this video, I'll be telling you the 7 lessons I've learned from crypto trading since I got into the crypto space 6 years ago. Now, one thing that's certain in trading is that the more time you spend trading and practicing, the more things you will learn. And for me, I've learned quite a lot of things from crypto trading, and I'll be sharing some of these lessons with you in this video. So make sure you watch this video to the end so you don't miss any important information. And if you're new to my YouTube channel, welcome. My name is Femi. I'm a crypto trader and I make videos on crypto, personal finance, and how to make money online. So if you love content like this, kindly like this video and please subscribe to the YouTube channel. Thank you. Now to the 7 lessons I've learned from crypto trading in 6 years. Number 1 is to always trust your strategy. Now, trusting your strategy is one big lesson I really learned at the early stage of my trading career. Now, when you develop a trading strategy based on thorough research and testing, it is really important to have confidence in it even during market fluctuations. Now, trusting your strategy helps you maintain a consistent approach to trading, and this consistency is key to long-term success in the volatile crypto market. Also, when you trust your strategy, you are less likely to make impulsive decisions based on fear or greed. And this emotional control is crucial in crypto trading where price swings can be dramatic. And by sticking to your strategy, you can properly evaluate its effectiveness over time, and this allows you to make informed adjustments and improvements on your strategy. Another thing is that when you trust your strategy, it helps you avoid the fear of missing out, which is FOMO, on every market movement or trading coin. And this discipline can save you from making costly decisions when trading. And lastly, when you trust your trading strategy, it helps you become profitable faster than when you keep jumping from one strategy to another. And remember that no strategy is perfect and the crypto market can be unpredictable. However, trusting in a well-thought-out strategy provides a solid foundation for you to become a profitable trader. The second lesson is to always have trading days. Now, as we all know, the crypto market runs 24/7, which means that you can trade from Mondays to Sundays. But one thing I've learned is that trying to trade every day leads to overtrading, and it is bad for anyone who is trying to become a profitable crypto trader. Now, instead, I only trade from Mondays to Fridays, and I even skip some days. So sometimes it might just be 3 days in a week. Now, why should you have your trading days? Firstly, you would definitely resist the urge to overtrade, and you also have time to take breaks from the chart. Also, having trading days gives you the time to plan your strategy before going into any trade. And all of these are reasons why any trader should have trading days. You don't have to trade every day just because the crypto market is open 24/7. Always have your own trading days. Lesson number 3 is to always evaluate your trades. Now, this is something I'm happy I did when I started trading. In my first 2 years of trading, I was always taking records of all my trades and evaluating them after I make profit or after I make a loss. Now, the reason why I was doing this was to learn from my profit and to also learn from my losses. Now, whenever I wanted to take a trade, I would take my jotter and pen and I would write down the date, the trading pair, the strategy I used, the risk to reward ratio, and the reason why I took the trade. And then at the end of the week or at the end of the month, I would take my jotter and evaluate all the trades I took and learn 1 or 2 things from them. Now, this really helped me, and this was how I was able to get a strategy for myself. And the same thing helped me to get the strategy I'm using today. And if you're interested in learning my crypto trading strategies, you can register for the complete crypto trading course. The link to that course will be in the description below. In this course, you're going to be learning everything you need to know on how to make money with crypto trading. So again, always evaluate your trades. Lesson number 4 is your risk is as important as your profit. Now, when it comes to crypto trading, I've come to realize that a lot of people tend to only focus on the profit they want to make and totally forget about risk management. Now, your risk is as important as your profit, and this is one of the most crucial lessons I've learned from crypto trading in the last 6 years. Now, this goes beyond the don't invest what you can't afford to lose principle. No, it's far more than that. It involves setting clear rules for your own trading activities and sticking to them. Now, this includes setting stop loss orders to limit your potential losses, using proper position sizing so that no single trade can wipe out your whole account. That is, don't risk all your money on a trade, and regularly take profits to secure your gains. Now, for instance, you might decide to never risk more than 1 to 2% or maybe 10 to 20% of your trading capital on a single trade, or maybe you can decide to always take some profit off the table when a coin reaches a particular percentage profit. Another aspect of risk management is being prepared for extreme market events. This could mean keeping a portion of your portfolio in stable coins or fiat currency to take advantage of sudden market dips or having a plan for what to do in case of a major market crash. Now remember, in crypto trading, protecting your capital is just as important as growing it. Lesson number 5 is always set trading rules. Now when I started trading, I never had any kind of rules to guide me. I was just trading blindly. But as the years passed by, I created trading rules that guided me when taking decisions. Now, setting trading rules is crucial for maintaining discipline and consistency in your crypto trading journey. Now, these rules act as a personal guidebook, helping you navigate the crypto market with a clear mind. Now, very soon, I'll be making a video on some of the rules you need to apply in order to become a profitable crypto trader. So if you're interested in that video, ensure you subscribe to the YouTube channel, turn on the notification bell so that you know when the video is out. But here are some key aspects you need to know when setting your trading rules. First, define your entry and exit criteria. You need to establish clear conditions for when you enter a trade and when you exit the trade, whether it is a profit or a loss. This helps you prevent impulsive decisions based on market emotions. Second, determine how much of your portfolio you are willing to risk on every trade. And number 3, create a trading routine. You need to set specific times for market analysis, trading, and reviewing your performance. This structure can help you prevent overtrading and ensure that you are making informed decisions. And number 4, define your no trade zones. This means that you need to identify market conditions or personal circumstances under which you won't trade at all. This could include times of, let's say, high market volatility or when you are not in your right emotional state. And number 5 is plan for taking profit. You need to decide in advance how and when you want to take your profit. This could involve scaling out of positions or setting your specific profit target. Now remember that these rules should be tailored to your personal trading style, your risk tolerance, and your trading goals. They should be written down and reviewed regularly. And as you gain more experience in trading, you may need to adjust these trading rules, but always do so thoughtfully. Lesson number 6 is to always set trading goals. Now, just like how setting trading rules is crucial, setting trading goals is also a crucial aspect of successful crypto trading. And this is because it provides direction, motivation, and a benchmark for measuring your progress. Also, when setting your trading goals, avoid setting unrealistic goals. Crypto trading is not a get-rich-quick scheme. One of the biggest misconceptions about crypto is that it's the fast track to wealth, but that is not it at all. Many new traders set unrealistic goals, expecting their trading capital to double or even triple within weeks. But in reality, sustainable profit in crypto trading requires realistic goal setting, patience, and a disciplined strategy. So setting unrealistic expectations is one of the fastest ways to burn out, lose capital, and give up on crypto altogether. And when I started, I had dreams of quick returns, but I quickly realized that the crypto market doesn't work that way. Instead of aiming for huge returns, I began setting smaller goals and more manageable goals, and over time, those consistent profits added up. So if you are setting trading goals, here are some key points about setting trading goals. First, you can set both short-term and long-term trading goals. This will help you maintain focus and motivation. Your short-term goals might be weekly or monthly target, while your long-term goals can span several months or even years. And the second thing to take note of is to make your goals realistic and achievable. While it is good to be ambitious, setting unrealistic goals can lead to frustration and poor decision making. And consider your experience level, your time commitment, and market conditions when you are setting your goals. And number 3, make sure that you align your trading goals with your risk tolerance. Your trading goals should reflect your personal risk tolerance. And if you are risk averse, your goals might focus more on capital preservation than aggressive growth. And number 4, regularly review and adjust your goals. Now, remember that the purpose of setting trading goals is not just to reach a certain profit level. It is to improve your trading skills, discipline, and overall strategy. Goals can help you stay focused during market volatility and provide a framework for continuous learning and improvement in your trading journey. Lesson number 7 is to learn to manage your emotions. Now, crypto can be intense and emotions can get in the way of rational decisions. I've been there before, panic selling when prices drop or trying to get into a coin that's skyrocketing. Now, for example, if you are someone who gets anxious about losses, you might be prone to panic selling when the market drops. Or if you tend to feel overconfident after a few successful trades, you might over-leverage or take stupid decisions when you are trading. But by understanding what makes you emotional, you can create strategies to respond to these emotions calmly. I've learned to detach myself emotionally and look at my portfolio with a level head. Now, having a plan also helps you stay disciplined. For example, if you set your stop loss and the market dips to that point, your plan can help you stick to your stop loss rather than holding on to a losing position in the hope that it will bounce back. Also, controlling your emotions is as critical as technical analysis or market research. And remember that it's not about eliminating your emotions entirely. It is all about learning to manage them so that they don't interfere with your trading strategy. So these are the 7 lessons I've learned from crypto trading in the last 6 years. And if you found this video helpful, please like this video, subscribe to the YouTube channel, and don't forget, if you want to register for the complete crypto trading course for beginners, where you will learn everything and anything you need to make money with crypto trading, click the first link in the description below or the link in the pinned comment. Thank you for watching, and I will see you guys in the next video. Bye.